Hi, my name is Ashley Hamilton, Detroit investor, and I'm all about financial freedom, time freedom, generational wealth, changing my kids' life, my life, and just wealth in general. Everything real estate is a passion of mine, and I just believe in time freedom and freedom.
Knows because you saw it somewhere either on the internet or when I called you up and invited you. This is Miss Ashley Hamilton. Several years ago, Miss Hamilton got started investing in real estate, and she got started in a very interesting and unique way with a creative first deal, how she financed it. But I don't want to steal any of her thunder. So please, we're very honored to have Miss Hamilton here to share her knowledge with us. So take it away, Miss Hamilton.
Thank you. Thanks, everybody. I appreciate it. So I would just start off by saying this is my first time ever speaking. While I've been featured on podcasts and all that stuff, it's normally a question and answer. So I'm a wing it type of person. It typically would go well, but the good thing is pretty much anything in real estate, anything in funding, business, and even tax strategies I got. So think of any questions you need, and I'll definitely be able to answer anything. So what I feel like I would do is just give a couple principles that I live by, go into my story and where I'm at now, and then we'll open it up for Q&A. Again, I'm an open book because when you're truthful and when you're really doing this, you don't have to lie, right? So no question is off limits. Obviously, I'm not giving anybody my social security number, right? My address, but no, I'm just joking. Yeah, so that's just it. So I just want to start off, and again, like I said, I wrote this speech because I haven't really finalized it yet. So it may be a little bit blotchy, but I wanted to start off with the one choice and the one sacrifice that I made, but it probably won't make sense until you hear where I'm at now. So just bear with me, right? Because you're probably like, well, what am I making a sacrifice for? But when you see where I'm at now, you guys will get it. Okay, so it all started with one choice, right? As we walked around here, we told everybody, we asked them about their goals and what they want to do in real estate. But at the end of the day, it really has nothing to do with real estate. It's more about one choice, right? And what my one choice was is I was going to break the generational curses that were handed down to me from my families, for my kids, right? I wanted to break that. I wanted to make sure that when my kids became adults, they were in a better situation than I was in. So it only took one choice and one sacrifice, and that was delayed gratification, right? So delayed gratification meaning not expecting as soon as I put $1 in to get $1 right back out, right? It was put $1 in and wait, right? Buy real estate and hold it. Real estate, buy and hold investor. Sorry, I'm aware. So that's what it was. So in 2009, I started my journey, and it all started from two simple quotes, right? So I just want to, and I'm using these numbers because it's so simple to accomplish these things. Real estate is really, really easy once you get an understanding, but it really takes mindset and you as a person to make a sacrifice. It will be temporary. I can't, when I tell you my story and how far I've came in such a short time, you guys will be ready to sacrifice for sure. So the two quotes that I had that really changed my life was be greedy, hey Judge, when others are fearful, and be fearful when others are greedy. So what did that mean? Well, in Detroit in 2009, when I started, everybody was saying, run from Detroit. Detroit is in bankruptcy, it's a war zone or whatever. I thought, hey, it's time for me to be greedy because other people are fearful. And then when you hear everybody like putting their money into Dogecoin or something like that, and now you hear people losing thousands of dollars, that's being fearful when others are greedy, right? Not saying crypto is a bad investment, but be careful when people are being greedy. You might need to sit back and strategize a little more. So that was the one quote. And the other quote that truly changed my life was take a few years to live how most people don't, so you can spend the rest of your life living how most people won't. And what that meant to me was, when you get a first property, right? Everybody wants a housewarming, right? If I get pre-approved for 305, I want to find a house for 310, right? Max it out, right? Nobody wants to say, oh, I'm pre-approved for 305,000, but let me get $100,000 house so I can save that mortgage payment to buy my next house, right? I'll be able to still get that housewarming. I may have to wait a year, but I'll still be able to have the big $300,000 house. But by me sacrificing this year, it's going to help you propel your journey much faster. So those are the two quotes that I really learned that really changed my life. So, so that's something I would like you guys to remember. Okay, so I can simply say that I owe my success to the one choice, right? So I'll tell you, sorry. Well, I'll tell you that in a minute, sorry, and then I'm out, right? But no, I'll tell you that in a second, sorry, that was a joke, okay. That's what I'm supposed to say, like, hey, I'm gonna tell you that, then I'm out, right? But no. So then it was gonna say, sorry, okay, let's get to that part. Okay, so 2 things about me. I'm very funny and I don't take myself serious, meaning that I really don't care what people think about me. Not saying it like that, but I don't mind, the outside opinions. I have to stick to what I want to do. And the reason why is because I learned early on, and I'm not trying to get religious, is that, I wasn't looking for other people to bless me. I was looking for God to bless me, right? So meaning that, like, yeah, somebody can bless me with $100,000 or $1 million, but me waking up every day is a bigger blessing to me. And as long as I wake up, I'll have an opportunity to make it 100,000 or whatever it is. So that's where I was going with that. So let me just go ahead and start my story because, like I said, it's a little choppy and I didn't have time to put it all together. So, okay, thank you. So I'll just go off in now. All right, so in 2009, at 2009, I was 22 years old. I was a single mother of 2 beautiful kids. My kids was 3 and 5 years old. I was a waitress, working at Red Lobster, making less than $20,000 a year. I was making $2.65 an hour. I was on welfare. I didn't get any child support. I was a single mother. And all I knew is that at the end of the year, I got my tax return, right? So that was the only time as a 22-year-old that I would ever have anything more than $1,000 was that income tax time. So I said, this year, I am not gonna buy a new car, go on a trip or get my hair done or, buy furniture and do all these things that my peers were doing. I'm gonna take that and put it into real estate. But I had no clue what real estate was, how to do it or anything. But what I did know is that every street that I rode down, there was a for sale sign, right? So I just happened to call it up one day and the property was $6,300. That's it, like there's not down payment, that was like the total. So I thought that was normal. So I was like, you know what, I don't have the 6,300 now, but when I get my tax return next month, if it's still available, I'm gonna go ahead and purchase it. So the house was still available and I went ahead and purchased the property. So I go to the closing table, super excited, or get ready to go to the closing table, super excited. And I didn't know that you had to pay closing costs, right? So the house wasn't $6,300. Well, it was, but I still had about $1,500 in closing costs that I had no clue about because I didn't know anything about real estate. So I had to postpone the closing, go pick up a couple extra shifts at work as a waitress. That's the good thing about being a waitress, to pay for the closing. So once I did that, though, obviously, it was down really negative situation, just ups and downs. But after I finished and I moved into that property, I said, you know what? It's okay. I survived it, and I want to do this every single year for the next 10 years. I'm going to buy 10 properties. I'll wait 10 years. They'll all be worth 100,000. I'll be a millionaire by 30, and I'm gonna move to California, and life will be good, right? That was the plan in 2009. Just to speak of how much I didn't know, right? Again, single mother, waitress, 20,000 a year and stuff like that. So obviously that's not the plan, but I did go ahead and continue to buy properties year after year after year. So I knew early on, well, everybody was saying like, well, Ashley, why did you decide to be a landlord and why did you use all cash to purchase your properties? And in all actuality is that was the only option in Detroit. So I don't know if you guys are, from here or been here for a while, but lenders weren't lending in Detroit. And then what bank is gonna do a mortgage for $6,300, So it was kind of obsolete. So I really had no choice, but I'm so grateful and glad that I took that option, guys. And you know why? Because cash flow helps you quit your job, right? So I know a lot of you all said, like, I want to start flipping, I want to start wholesaling, but is anybody in here goal to quit their job or retire just a couple years early? Right? So the only way to truly do that, guys, is cash flow. And cash flow comes from rental property, buy and hold real estate, right? So I know a lot of you flippers or wholesalers probably ready to give me the side eye or something, but don't worry, because myself, you will find out, I have 6 real estate businesses. So even though I'm a buy and hold investor, I do wholesale. I do project management. I do property management. I still haven't flipped. I made a way to flip. It's called reverse flip. It's a trademark that I currently own, and it's a training that I do teach people, and I would love to tell anybody else about it if you want to know. But so there's not, by you being a buy and hold investor does not mean you can't flip, right? I'm not saying you can't wholesale. You can do it all, obviously with having one thing, but the goal is to have buy and hold rentals. And it's easy. You guys can all figure out when you're going to retire right here and right now. And the way you do that is you could say, okay, right now I'm living on my bills are about $2,000 a month, or I'm making $3,000 to $4,000 a month in income. If that's you, then all you need to do is replace that income with rental properties and you're retired, just like that. Now you may choose to continue on and do some flipping and stuff, but the goal to retire early is to place your income with rental income, right? Obviously living below your means. So that's what I was able to do. So fast forward, again, the goal was to be a millionaire by 30, right? Buy a house every year until I was 30 so I could be a millionaire. I had 10 properties. So I'm glad to say that I did have 10 properties in 10 years, but I was far from a millionaire, right? Because the market was still down. But the good thing about it is I was able to quit my job. So at 22, when I started, I was a waitress making $20,000 a year. I'm sorry, just repeating it for the people. Single mother, and by 30 years old, I was completely financially free and retired. And the reason why was because I owned 10 free and clear rentals that was generating $6,600 a month, and I didn't have a mortgage on my house, right? My primary. So, and I know, so it's just that simple. If you buy one of these cheap $50,000, $100,000 properties, and within the next 10 or 15 years, you pay that mortgage off, and you get 3 or 4 rental properties to supplement your income, you're retired, right? So I said, you know what, I'm good, but I was 30 years old. I had energy. My kids, I would go to Vegas. My kids wouldn't even call me. They didn't even miss me. I'm like, hey, because they had me here, right? That was my goal, though. I didn't want to leave my kids to daycare, but they saw me every day because I was working, for myself. So they didn't miss me when I was gone. So I said, you know what, I'm still young. I need to get back out there. I want to rebuild my dream or whatever. So at first I had planned to move out of state to like Florida or somewhere just for better weather. Quickly changed my mind. I'm staying home. But anyway, so that's when I decided to start back working. So at 33 years old, again, still financial free, I decided to start working again at Bank of America. And at this point, I wasn't looking for a job. I was looking for a job that can help me in my journey, right? So wouldn't it be nice if you all had enough income that you can pick and choose where you work? Because I'm not a person that's gonna come up here and tell you guys, quit your 9 to 5, quit your 9 to 5. If that's your goals, I can coach you to that. But I'm a firm believer in waiting till you're set, right? And then still staying a couple months later, just in case, right? So I started back working at Bank of America, but I chose to work there because I wanted to know how banks work. I wanted to know what's the foreclosures like, what's the mortgage like. I wanted to have people that could show me how to build business credit. I wanted to have friends and stuff in that industry. So that was my choice. And that also helped me into my next journey because at the same time, Detroit was becoming lendable, right? Now, again, a lot of people, if you are business owners, you may be writing off all of your expenses, right? That's what we all want to do, right? I'd rather the government owe me. I don't want to owe them. But that will not help you when you're starting to invest as an entrepreneur. They want to see 2 years of tax returns and they want to go by your income. So I needed the W-2 anyway. So I was working part-time and that really helped me. So anyway, I said, okay, I'm not buying any more houses. I'm going to buy apartment buildings now. I got my 10 properties. I'm financially free. With that being said, I got featured on Bigger Pockets randomly, and it really changed my life for real, for sure. Hey, Terry. It really changed my life because I didn't know I was special, and it really went viral, and I met a ton of people, and it really lit another fire in me. So I was going to go ahead and start buying apartment buildings. I wasn't going to buy any more properties. So that was in 2009, guys. 2019. I'm sorry. So I'll just repeat it just in case I messed up because I know people were coming in. So again, from August 2009 to 2019, which was 10 years, I bought 10 properties. I was financially free. I was retired. So in 2019, when I said I wasn't buying any more properties, after being featured on Bigger Pockets, I got a new fire and I ended up buying 22 more properties from August 2019 to August 2020, right? I just went crazy. I don't know what was going on. It was just the momentum from Bigger Pockets. So that obviously changed my life again, right? Now I finally became a millionaire, a multi-millionaire at that by buying all these assets. And if you guys didn't catch that, that was right in the middle of COVID as well, right? So what changed, right? So the only thing that changed was at first, primarily, I was using my own cash and credit cards, small credit cards, right? And again, real estate was cheaper, but as prices started to go up, I didn't say, oh, I can't buy properties anymore. I had to adjust. And just to be honest, a lot of people that I meet here in Detroit, they're stagnant and they're not taking advantage of these deals here. And I have clients, I have over 400 clients that I've coached all over the world, and they're investing in Detroit and we're not investing in Detroit and we live here. And the reason why is because we see that house was, I could have bought that house 5 years ago for $10,000. Well, you didn't. And I'm not trying to be harsh, but we didn't, but we don't value what's in our own backyard. And, I don't want to preach into that. Everybody has their own ways of investing, but Detroit is a very good market. And I'm not saying that the East Points, the Oak Parks, and the Rosevilles are not either, but you just have to pick and choose the market. But I could tell you what Detroit has done for me. So I own, all my properties are located in Detroit. I own 32 doors right now as of today. I am under contract, which I haven't told anybody but my good friend Jay and my daughter, obviously. I'm under contract for a 25 unit apartment building right now, which would be the biggest deal I've ever done. And it's so crazy because I thought I was retired, right? For somebody who was just saying 2 years ago that they were done, now I just went all crazy and stuff. But that's just where I'm at. And the reason why I'm doing this, guys, is because cash flow, right? Where I talked about early. So not bragging. And again, I'm super broke because if you guys just walk in, I have 7 projects going on right now actively. And if you don't believe me, you can follow me on Instagram because I go through them every day. It's crazy. So I don't have any money, but I was able to create $25,000 a month off my rental properties alone. Mind you, I have 6 real estate businesses and I still got on a $10 t-shirt, right? And I still didn't retire from Bank of America until I was making more money than my boss's boss's boss. And I still went to work as a part-time teller, the lowest of the totem pole, but that's humble, right? You cannot just go out and brag and be that way. You have to make sure that you have a long-term plan because I can get $1 million today. It's not enough to retire on because inflation, the money will go, but free and clear or buy and hold rentals, I can retire any day. And that's where I'm at now. And what I was saying by that, so I went from making $20,000 a year as a waitress to making $25,000 a month just off one business. And a reason why is being humble, right? Not quitting my job as soon as I got the second or third rental property, right? I remember one day I got a check for $120,000. That was when I refinanced. And I walked into work that same day and deposited with my coworker. And she's like, girl, I would have quit. And I'm like, why? You know what I'm saying? Because I needed the W-2. See, I always think bigger, and we always have to think bigger, right? I needed a W-2 so that I can get financing to get more deals. So that's where I was going because I'm doing this off the top of my head. And like I said, I'm going to a conference tomorrow, so I'm all over the place. But where I was going with that was how I got, so I went from buying the 10 deals to how I got 20 deals in 2 years was I started to use creative financing, right? So that is business funding, business credit cards. So I already had my real estate business established and things like that. And I do teach people how to get business funding. Obviously, I won't teach that here. That's a paid service. But again, I offer coaching and you can reach out. But anyway, if you have a decent credit score in a business, you can get access to up to $250,000 in credit. It's just that simple. So I can tell you guys, everybody in here, you all can get started in real estate today. All you need to have is 3 simple things and maybe a 4th if you're just really bad, right? So if you have an abundance of time, you can get started in real estate. If you have abundance of money, you can get started in real estate. And if you have abundance of credit, meaning like a 720 or above, you can get started with real estate, right? So if you don't have any money or credit, I'm assuming you got a lot of time because if you don't have money, credit, or time, then I don't know what to do. But I'm just saying, come on now. But yeah, so that's how it goes. So, okay, so if you don't have any time, I'm looking to partner. I stand here in front of you guys today to say that I'm a hard money lender too, and I'll tell you guys all the hats I wear, but I have access to unlimited funding, right? Money is not the issue to get started in real estate. Let me repeat that. I have access to unlimited funding. Again, I'm broke. I'll pull up my credit cards. Don't nobody try to rob me, not that I am broke, but I have access because I partner with hard money lenders and other lenders. And like I said, the conference that I'm going to tomorrow. So if I have unlimited money and everybody is saying money is the only thing that stops me from real estate, what's the issue? No, it's not. I need time. Now the money isn't the option. I don't have a lot of time, right? So if you have a lot of time and you're willing to be coachable, then you can leverage your time and leverage my money and we partner together and do flips, right? So the average flip in Detroit is generating, or in this area is generating about 60,000. So by you leveraging your time and partnering with somebody like myself, you can make $30,000 because we split it 50-50, right? And how that works, if anybody's interested, because I am a project manager, so I probably will have a course, but I do have some training because that's what you would need to be, a project manager. But you don't have to be certified for that. I'm not a licensed contractor, and I've rehabbed over 100 properties because I'm a project manager, meaning I manage the contractors, I manage the investors, I have the vision on what I want, I know how to get the inspections, and I know what the tenant's like. So I don't have to be skilled for that. So again, if you have time, you may have to book a call with me or find a coach, but you have it in your back pocket. I'm looking to partner right now. I see deals every single day that I would love to buy, but I just don't have the time. So that's for people who don't have money or credit and think they can't get in real estate, right? I'm a strong believer of no excuses, right? We have no excuses. If anybody can stand up here and tell me that they started off worse than me, I'll give you $100. I'll give you $100. Come up here. I was 22 years old, a single mother of two. That's my beautiful baby. Sorry to put her on blast. She's 18 now and going to college, sorry. But 22 years old, a waitress making less than, I got my W-2. My W-2 was $12,000 in 2009 when I started, but I did have $8,000 in other income. I was making $20,000 a year and I still was able to buy a house. No financial backing. I bought my mom her first house. That's how I didn't have the knowledge. I don't blame my family, but we just weren't there. And a lot of us aren't, right? A lot of our families don't teach us how to do this stuff. So again, but you can do it. There is no excuse. So again, if we don't have time, you need to be on YouTube. You need to be coaching with me, figuring out how to manage these projects and leverage hard money lenders like myself or people that have access to capital and make a couple dollars to get you in that position. Now, again, if you have abundance of credit, if you have a 720 credit score, again, let me repeat that. And you're willing to start, if you don't have a business, you're willing to start a business, then guess what? Owning real estate is a business, right? I can get you access to up to $250,000. Just simple as that. So money is not an obstacle. And then again, if you have a lot of access of money, which is something similar to me, even though I don't have it, I have access to it, then I can get started with real estate because I can partner with people that have abundance of time. Does that make sense, guys? Okay, so again, so that's where my journey is. I'm probably about done because I don't even know what else I've done so much, but I will just name a couple of accomplishments and a couple of things that I'm doing now, and then just give you guys some follow-up, and then I will open it up to questions. Typically when I get a question, I do turn into a lecture as well. So like, you know, I'll expand on it a little further just to help out. But yeah, so that's my primary business is my buy and hold free rentals here in the city of Detroit. I also have a consulting company where I coach entrepreneurs and investors just like yourself all over the world on how to buy real estate, typically using none of your own cash or credit, and that's using the business funding. I also am a project manager. Like I said, I have managed over 100 properties in the city of Detroit. I have 7 active properties going on right now. I also am a property manager, right? So when I first got started, I didn't know that there was a property manager. I just said, okay, the house is ready. I think I better find a tenant. So I put a sign up at the gas station. I didn't know I could pay people to do this. And I just, so I winged it. And then somebody called me and was like, what are you doing? I was like, I'm just renting out my house. He was like, well, why don't you do what you're doing for me? For you, for me. And that's how I became a property manager. So that has been working out. And my philosophy behind that is I'm doing it anyway for my own properties. And, I can create another stream of income for me and my family. So that's why I did that. So I also do wholesaling or assignment of contracting. I have clients all over the world or people that just reach out to me that may have bought deals in Detroit that want to get rid of them or vice versa. So I do wholesaling, and I call it a transaction coordinator. See, I don't want any fancy names or titles. I'm not highly educated. I did 1 semester in college, right? I barely made it through high school. I don't want all these fancy titles. I didn't want things that was going to hinder me, right? I wanted to just get and figure out how to make actions today. So I call it transaction coordinator. I am a licensed real estate agent where I probably haven't sold a deal in probably 5 years, like, cause I just wholesale them, right? But I am actively a licensed real estate agent. And I'm a hard money lender, right? So if any of you fix and flippers, and the good thing about me is, first of all, I'm an investor myself, and I specialize in Detroit, where 90% of the lenders do not like to lend in Detroit. So if you are a fix and flipper in Detroit, if you want to get started with fix and flipping, you can tap into me with hard money if that's the route. But again, hard money is something you have to learn, and it's very simple. I'll break it down to you right here, just simply. So if you want to do a deal with hard money, the goal is to be able to purchase it and renovate it for 70% or less of the ARV. So I'll break that down to you guys. So the ARV means the after repair value, right? Think of it as somebody's about to move in as a tenant or it's ready to sell, right? So you need to figure out what the property will be worth once it's repaired. And then once you do that, let's say it's worth 200,000, then right? Because I always do this. 140. Right. Okay. 140. Right. Okay. So if the ARV is 200,000, then you want to be all in at 140,000, right? So let's say the purchase price is 100,000, the renovation is 40,000. you're all in at 140, you can do that deal without with using some of your money, but with using somebody else's money, and that's a hard money lender. So what they're gonna do is they're gonna fund 90% of the purchase and 100% of the rehab. So for that example, again, the deal, let's say the property is 100,000 to purchase, it needs 40,000 in renovation, and when it's done, it's gonna be worth 200,000. Then you would bring 10% of 100,000 to the table, so that's 10,000. You will have some lender fees in there. I call it about 5,000. So essentially, you could do that deal for about 15,000 out of your pocket, right? Does that have to be your money? No, it doesn't. You can use a credit card, use business funding, use a personal loan. So we can do this, guys. It's definitely possible. So again, now I do just want to talk to people about, because I remember when I started, I didn't have a ton of training, but people were always saying wholesale first, then start flipping, then buy a rental, then scale up. That was like the trajectory. So I just want to say I do believe in that, but you do not have to start that way. And what I would say is if your goal is to retire early or have financial freedom, then flipping is not going to get you there, unfortunately. Again, you can still flip. And I know a lot of flippers are probably gonna be waiting on me in the back. You can still flip. I'm not saying this, we I don't even know how to say it. This ain't the Bloods and the Crip, right? We can do both, right? We're not gang. So you can still flip, but so let's say, for example, you do 2 flips a year, right? You say you did 2 flips this year, you made $1 million, right? You still will start work again January 1st because eventually that $1 million is gonna run out. And then most of the time you're using that $1 million to supplement your income and pay your expenses and stuff like that, and buy phantoms and all these things that you guys on Instagram are doing, right? So I know all of them gonna be work or unemployed next year, but I'll still be here. And the only reason why I'm telling you is because my buy and hold rentals, right? And again, I do self-manage them because I built the company and I needed something for my legacy, but you guys can find management. I do strongly suggest though, I'm not a person that just more like, oh, I just delegate everything, right? Oh, hire a property manager, oh, hire a contractor, I'm paying him, you gotta do it. You guys have to have a basic understanding. Now, I have never swung a hammer, I don't hang drywall, but I can tell you exactly how many sheets of drywall I need, what all I need, because you have to have a basic knowledge, because you cannot put all of your hopes and dreams on other people. Unless they're paying your bills, right? But at the end of the day, you're responsible for yourself. So I'm not saying go be a property manager, be a contractor, but take a class. I normally do this stuff for $200. Watch a couple YouTube videos, have a basic understanding, because the first thing investors want to say is, oh, the contractor ran off with my money or they did this wrong, but you can't leverage them. You don't know their skill set. I give my contractors the whole project laid out like a puzzle. All I need you to do is put the pieces together, but I told you every piece I want, because they don't know what tenants like. They don't even care what tenants like. They don't know what attracts Section 8 people. You know what I'm saying? They're just here as contractors. So that's another gem that I can give you guys, just making sure you have a basic understanding of all of these things. And you probably will be able to go further in Detroit. So I do want to break down again, and I'm using Detroit as an example because that's me, but you can do these in some other markets. There are cheaper markets like Westland that you can still find good deals for 50, 60,000. Also like the Midwest, like Ohio's and other places like that. But if you ask me, I'm Detroit all day. You know what I'm saying? That's just what it is. But I have no problems and no issues with somebody investing in a different market, because I find opportunities there as well. But I just wanted to give a strategy for why I'm passionate about Detroit and what the possibility of buying properties in Detroit could do for you. So the program that I'm working on that I'm actually doing next month is to teach people how to buy properties in Detroit without using any of their own cash or credit. So to go back with that business credit option, again, all you need is to be willing to start a business, which could be investing in real estate, or you may already have a business and you have at least a credit score of 720, you can get access to 250,000. So on average, my clients get around 80,000 their first round, their first funding round, and that's business credit, right? This business credit is business credit cards, right? They're not loans, lines of credit. And the reason why, because business credit cards typically use stated income, meaning they're not going to ask you for your your W-2, your tax returns, right? I'm not saying lie about the income. I'm just saying they're easier to get because they're not asking for so much paperwork. So for example, the clients that I've been helping, on average, they have been getting $80,000 on their first round. And just so happened in Detroit, I just found a deal the other day that you could purchase and renovate for $80,000 or less. So the play is in Detroit is to get the business funding. Now, You may have to get in position, and that's okay. If I tell you you can have a rental property generating $800 a month, would you wait 6 months to get your credit in place to do that? If you had to, I'm saying if that was the only thing you had to do, if you didn't have the money, will you be willing to wait 6 months to fix your credit to get that? Right. So if you're in here like, I can't do it because I don't have good credit, get with a credit repair specialist. It may take 6 months, but you can do this. The properties will still be there, opportunity. But anyway, yeah, so $80,000, the property is $80,000. You then would fund the property using your business credit cards at 0% interest, right? So that is typically for a year. Now, if I even ask my mom for money, she's gonna say, hey, you gotta throw me some interest. She's not gonna give me a loan at 0%. So that's another reason why I love credit cards. But I only teach this in a private setting because you cannot go out and buy Gucci shoes with these credit cards, because after that year is up, you're gonna have to pay it back. And guess what? That interest is the worst interest to pay. Credit card interest is 24%. I would never buy a property on a credit card if I had to pay interest, because hard money lenders, I'm doing loans for 7 and 8%. The banks, I could borrow money from a loan shark probably for cheaper than that. So the only time we're using credit cards is at 0% interest. In that first 12 months, you might get 18 months, right? We are only using credit cards to buy assets, right? So go ahead and take those purses out your Amazon. I saw some of y'all with your Macy's. No, I'm just but yeah, don't do that. Just buy real estate, okay? So the goal is now we're going to use the BRRRR strategy. So now we essentially bought this property using our credit card, right? So it's not reported on our personal credit. It's not reporting as debt because it's on a business. That's not attached to our personal credit, right? So we're doing this. We got the funds. We bought the property. Now we may take 4 to 6 months to fix the property up. May take a month. It doesn't matter. But you can also use those funds to fund your rehab, right? Now, once you have the property renovated and ready to move in, let's say it took you 6 months. Now you're going to go to the bank or credit union, right? You're going to say, hey, I own this property free and clear, meaning I have no debt attached to this property. Is the debt attached to the property?
No, it's attached to the car.
It's attached to the car, which is attached to your business, right? But I'm not saying don't pay it back because, obviously it can mess you up, but I'm just saying it's not even attached. So you're going to go to the bank, you own this property free and clear, meaning you have $80,000 in equity in that property, right? So now the bank is typically going to give you 75%, to go up to 80% of that value. But again, if we're renovating properties and we're spending 80, we want it to at least be worth 90 or 100, right? Not too much because Detroit is not an appreciation market. But if I can get 10,000 more than what I paid for it, I'm good to go. So I don't know if you got the calculation.
Okay, just throw the numbers out.
90%, $90,000 at 75%. Sorry. So again, we spent 80,000 on it, right? We're using our business credit cards. We're funding this with somebody else's money, paying 0%. And then now we're going to the bank. The house is now worth 90,000 because it's been 6 months and we did such a great job. And now the bank is going to give us 75% of 90,000. And what is that going to be? 22.
So they're going to give you 67.
Okay, 67,500. So originally our loan was, well, not our loan, but our business credit, we exhausted 80,000, right? Because we purchased the property and we renovated it. But every month you're paying the minimum, which is typically 1%. So I call that probably about $800 a month that you're paying to service that debt, which I can teach you how to do that and show you how. So by the time you do go up to refinance the property, that has been dropped significantly. But let's say, you owe 70,000. When you go to the bank, you're getting that 67,000 right back. That's how you're going to pay the loan off within a year. And then you can do it again, because guess what? How many social security numbers do you guys have? How many businesses can we create? As many as we want. So if I can get you 250,000 on one business, I can get you 250,000 on every business, right? So that is the play. That's my business credit play, and that's what I've been using when I see a property under 100,000 in Detroit. I'm business credit. I'm running that play. Now, if the property is over 100,000, or maybe even less than 100,000, but it's going to be worth a lot. So this flip, I call it the White House that I'm doing. I purchased it for 50,000. And the only reason, to be honest, that was an extremely good deal. He wanted 80 for it, but he had 3 days on his wholesale contract, and I had cash in quotation marks because I have a credit card that I can just swipe and send the money. So I was able to transfer that 50,000 really quickly to him in 3 days. That's how I got it. That property appraised for $265,000 in Detroit. Yeah, in Detroit. It's not even Boston, Addison, but it's right outside of there. Yeah. So that was a hard money play, right? So now I couldn't use hard money because hard money's not going to close in 3 days. But what I did was use the business credit to fund the property for the 50,000. Then I went to the hard money to fund the rehab. And because I
This isn't check, this is, wait, I always say wrong. This isn't checkers, this is chess, I don't know. But anyway, it's not complicated, guys. You just want to get with somebody who's knowledgeable, right? Somebody who's actually done it before. And then also, a lot of times we have to look at our own goals. Because if I ask you what's your goal and you say, I want to quit my job in 5 years, but then you tell me you want to only look at fix and flip, I know that you need coaching, right? Because again, retiring early is not created by fix and flip. You have to start work every year when you're doing flips, because you got to generate that money to support that income. So typically I like to, if that's your model, and sometimes we have to do a flip, right? Just to pay down some credit, pay down some debt. If that's your model, flip, buy a rental. Flip, buy a rental. Rental real estate is going to be the best. And then I heard a young lady back there, I believe that she was interested in Airbnb. I think it was you. Yeah, absolutely. That is another way. So what I like to do is I don't even know I have like multiple options, right? I never want to have one exit strategy. So I'm literally days away from opening up my very first Airbnb in the city. It's been finished for about 2 months and I don't want to do it. I don't want to do it. And the reason why, so, right, that's what I'm saying. That's why when you say Airbnb, I already looked at you because listen, you might get a call like, hey, you want to make some money? I'm telling you. So, and the only reason why I don't, because even though I work and I have 7 businesses, I don't like to work, right? I want to choose to work. So this Airbnb, every time I think of it, I'm like, oh, I can make $6,000 a month. And, that's great because renting it out, I'm only going to make $1,800 a month. But I'm like, dang, I got to worry about them calling me at night. I got to worry about stocking. I got to have the cleaners. And I know I can delegate, but it's just a lot. But I'm doing it because I'm coaching people on how to do it. So I want to actually have it done. But honestly, I don't think I'm going to like it. Because when you have a rental property, like I went to a property that I hadn't been to in like 5 years, obviously during COVID. And every time my contractors go in for a repair, I have them send me a photo so I can kind of do a mini inspection. But, I some of these properties I haven't been to in years. Normally they just pay their rent and life is good. And, it may have a leaky sink. I plug it with my plumber and that's done. So that's what I like. And that's my freedom, right? If my daughter, she said, hey, I got to go to college. And sometimes she do like, oh, we got a meeting tomorrow and I didn't know about it. I just take the day off. I don't have to ask anybody, obviously it may put more work on me, but that's time freedom. And that's what you guys want to have, because at the end of the day, I see the American family. I don't want to get too, but I feel like we're losing that, right? I have barbecues, only 4 people show up. I'm like, what? But I understand because everybody's working and doing stuff. But if you, had a couple free and clear rentals, or not free and clear, sorry, buy and hold rentals, or just some extra side hustle or another stream of income, you would be able to spend more time with your family and bring that aspect back to I guess, humanity. And that's probably what we're missing, because some of the things I'm seeing the kids, it just really, truly, really hurts my feelings. But I do have a nonprofit that I'm working on to try to help, women and kids and stuff. And again, that's my being able to take that sacrifice, living how most people won't. It took me 7 years. And like I said, I was able to retire completely free and clear. And now I choose to work because it's bigger than me, right? Now, if I had a rich parent or, or somebody who was in this, I probably could retire. But unfortunately, I'm the first, right, in my family, the first millionaire, the first business owner, the first homeowner sometimes, right? So if that's us, we don't have the luxury to, as soon as we get our first $1 million, go buy a jet, right? Because everybody's like, oh, you a multi-millionaire, why you still work? Because I want to, what I'm saying? I choose to, but Oprah works. Oprah's a billionaire. When she does, but they'll have people come out, that's work. You know what I'm saying? So when you're doing something you love and you don't have to work, you want to, right? So when you look in your bank account and realize I don't have to work, you're gonna want to, because it's gonna change your mindset and turn you into a different individual, I would say. But anyway, when I first started off, I said I had made one choice when I started, made the choice to change my life for real estate, and that was to break the generational curses. And I just want to say I'm super proud of this, and I know it's going to be so much more. But when I was 18 years old, obviously I had to go to the welfare office. I was a single mother with 1 child and 1 on the way. I needed health care, I needed food stamps and stuff like that. So at 18, I had to march to get government assistance. My beautiful daughter, I don't want to say because I don't want to embarrass her. She turned 18 years old and I marched her into the bank to get her first business credit card. My daughter's 18, she owns a business. Her credit score is 850. Her college year is paid for 100%. She would never have to do a loan, right? She owns her own car. And I keep trying to tell her to buy her house, but I was like, I got to tell her, I'm gonna go right here. But anyway, when she's ready, she know she can buy a house. But that's my goal. She don't know it because she's going a little bit up north. So I'm
duplex is up by her college so that I can get her the house back, whether she know it or not. But anyway, right, but that's what it is, and I have a son too, and I'm doing the same thing, right? So maybe you don't wanna own 32 properties, right? Maybe you don't want to manage 100 rental properties, right? Renovations, maybe you want just to make sure that your kids have a good credit score, have a chance in life. That was one rental property for my daughter and one rental property for my son. That income from that one rental property saving $400 in that account covered her college fund, right? And that was before. I know so many strategies now, they're on payroll, right? They're getting paid. We're partnering up with their IRAs and they're investing now. They'll never have to do any of this stuff. But I didn't know that now, right? This is where I'm at now. But so anyway, one rental property saving half the cash flow for your kids, right? That put her college free. That also paid her lease on her car, right? Starting a business, that's easy. And all I did to get her that 750 credit score when she turned 18 was add her on my trade line, right? So if all you have, and it's like if you're 60 or maybe you're 50, like, you know what, F them kids, I'm done, right? Maybe you just fix your credit, get a 750 credit score and add them on as a trade line. Give them that olive branch, right? Because a lot of us, when we started with a disadvantage, right? Some of our parents had CTE in our name and cell phones, and we was 4 years old. Like, what? I got bad credit. I'm only 4, right? So that's what I'm all about, right? We don't have to continue what we started from, right? We can always choose to change. And some of us may be older, some of us may be younger. You know what I'm saying? It's never too late. You can choose and pick what you want to do. It can be very minimal. You know, you could do wholesaling. Like I said, you could do so many other things, but get involved, create that second stream of income. Like I said, even if it's only for you, for your kids, right? If it's for you to be able to retire early, whatever your personal goals and dreams are, right? Because I say this because, you know, when you see doctors and nurses and stuff, obviously they make a lot, but these are very special people, right? They're, so some people love their job. It takes a special person to be a doctor and nurse. So that's somebody that money probably can't buy. So again, I'm not saying quit your job because some of our jobs is really helping. We need nurses, right? We need teachers more than everything. We need labormen, but at least have a second stream of income for a rental property or two, or some kind of real estate business that can, you know, help you in times of need and buy back your time, right? Even if it's only an extra day a week, right? And the last thing I can say is while I'm an open-minded person, so I do learn about stocks a little bit. I haven't took the plunge yet. I'm interested in crypto and all that stuff, and we could do it all. But real estate is the only thing that has stood the test of time that we know is tangible, something we can touch, and they're not making any more land, right? They're not making any more land. So what we got is all we got, and there's so many more people. They're saying it's a crisis on birth, so they're trying to boost the population. Where's all these people going to stay? So getting real estate, no matter what it is, you guys definitely will be successful. But the goal is to buy real estate and wait, meaning buy and hold at some point in time. I know you guys have heard it. I can tell you guys some of the landlord crazy stories, but I promise at the end of the day, being able to have my daughter be able to go to college debt free, all that, them headaches is minor, right? For the lifestyle I live now. So with that being said, definitely guys get educated, right? I know a lot of people are charging, but please be careful who you choose. You want to find somebody that's actually doing it, right? But there's so much free information online. I'm a coach, like I said, whatever you need, I'm sure there's so many out there to help you. Definitely get coaching. Like I said, tomorrow I'm going to fly out to North Carolina. I'm in a multi-family conference. I'll be with 900 multi-millionaires. I'm meeting a guy that owns 86,000 doors. And I didn't believe it. I had to see receipts because I said, well, you mean 8,600? Because who even wants that many? But he's a fund manager. He's a partner. But yes, and it wasn't the other one. He was like, you don't believe me? He got 56,000 doors. This is nothing. So I invested. I'm spending over $5,000 to go out there, right? So whatever you're interested in, you can do it. But as you all heard, if you walk in, I'm under contract for my first 25 units. So I knew, hey, while I feel like I've done this before, I've rehabbed over 100 houses, this is something new to me. So I don't have a problem with going with somebody that's the expert, just making sure that I vetted these guys, right? Making sure that they're who they are, who they say they are, and things like that. But again, I'm an open book. Nothing's off limits. I'm more than willing to take questions. And if you guys wanted me to talk a little bit more about anything else before we start, let me know. But other than that, we can jump into the Q&A.
Wholesaling.
You said what's wholesaling?
Yes.
So to be honest, I don't call it wholesaling because they're starting to make laws around it, you know, and try to make you be a licensed agent. But you are essentially transaction coordinating a transaction. So let's say I call you and say, hey, I'm tired of this house.
I'll sell it for 50,000 right now. I got roaches. I don't want to go in there, whatever. And you're like, oh, okay, cool. And you're here. And you know, somebody said, hey, I'm looking to buy my first rental property, right? Oh, okay. So you can say, hey, I have a property that you might be interested to. It's 55,000 or it's 60,000, you know, and now that's you putting that extra 10,000 because you know he wants 50,000. So you're basically going to put this seller for 50,000 together with the buyer for 60,000, and you're going to make the middle, which is 10, right? Obviously, you want to be knowledgeable about ARVs and stuff, but I do have a course on that. What was a live workshop, and you can get the replay if you want. Just hit me up on Instagram.
So you said you don't call it wholesaler. What do you call it?
Transaction coordinator.
Okay.
Coordinating a transaction.
So why could the person who's trying to sell their home just go to real estate agent and sell it?
Because they're gonna make them to the roaches.
Okay,
They don't have
all
money
right.
to kill the roaches, or maybe they don't have, you know, they don't.
So it's a property.
It's a problem, it's a distress problem,
Yeah, okay.
right? Or maybe it's somebody that wants to move in quick, you know, or maybe it's, God forbid, a death in the family, and they just can't stand to look at the house, right? They don't even, like, I bought a probate deal like that their parents had passed, and they didn't want to go in. They literally left all the lady stuff because it hurt them too bad. And that was how it was. So they just wanted to get rid of it, and we swooped in there and bought it. All right, sorry.
I'm curious if each rental property you have under different, so you have one entity, one house belongs to one entity and another house belongs to another entity. Is that how you do it?
Okay, so so no, I don't. Obviously, I know that strategy, but a lot of people do that to make money on creating LLC. So I limit my exposure, right? It's limiting your liability. So each LLC, I want it to be under 250,000. So if my house is 250, then yes, it's one property. But if it's 3 or 4 rentals, yeah. So you try to keep it as simple as possible. But what I would say is everybody said, well, what if you get sued? They can take your asset. Well, I guarantee you, they're probably going to take your assets probably 99% of the time because commingling voids all of that. So meaning, let's say you make a mistake or your tenant make a mistake and send rent to your email versus your phone number and it goes in the wrong account. And you say, oh, let me put it in the right account. That's commingling, meaning if you get sued, they can go there. And that was just an honest mistake, right? So I'm not trying to scare you. It is good for protection, but if a good lawyer, that's what lawyers are paid for, to figure out that. So people take too much time, energy, and money. And I even know people that wouldn't even start because they wanted to have their proper structure, right? So my suggestion would be make sure you have liability insurance. So my homeowner's policy has 500,000, and then I have an umbrella policy over $1 million, but I have multiple, right? So that's just me like, okay, how much is my portfolio? Let's say it's worth 3 million. As long as I have liability to cover the 3 million and liability on the property, I'll be good. But I do know that strategy. In Michigan, we're lucky. Our LLCs are only $25 a year. So if you're comfortable, do that. But I know the thing is, that's another job for you because now you have to manage these LLCs. You have to remember to pay the $25 a year. You have to make sure they're in good standing. And that's where lawyers and these people get more money. So that's why they teach it. So I'm not saying it's wrong, but you don't have to do that. If that's bothering you, you could create one and put them in there and just get that liability because that's the only thing that you stand to lose. So if you have that to cover your assets, you'll be good. Okay, that sounds good? All right, thank you. Yes, sorry.
I came about a few minutes late. How do we get in touch with you?
How do we get what?
In touch with you?
Oh, okay. My Instagram page is the best way. It's Detroit_investor. Yeah, absolutely. I answer DMs. I do coaching. I am doing a live event here in Detroit, August 12th, downtown Detroit. I'm going to post all of that. It's right in the link in my bio, the website, and it'll be all on my story as well. I'm sorry. What is it? Detroit_investor. I got to make sure I say that 20 times because I need more followers. Okay. Yeah, and I'm a social media influencer too. And I get paid for like referring people, right? So I'm an affiliate and an influencer. So that's another thing. Like whatever you guys want to do, I'm sure I can probably figure out a way to make money doing it. So if you like DJing, I can find some affiliates that would love for you to talk about their product. Like me, I'm a property manager. I have property management software. I have credit repair. I just get checks, and I'm not even trying to brag. I make about $1,500 a month on that affiliate business, but that's something I haven't even really touched. I signed up a couple times, I promote the link, and people buy, and I just randomly get checks from just doing that. Yeah, so that's a good thing. All right, sorry.
So you talked about the pay as well. First of all, I want to know how flexible is your schedule? I mean, could you say you talk about time and, you know?
Yeah, I can, whatever, if you tell me actually, if you got an opportunity and I just care to hear about it, I'll cancel my day tomorrow. I can book another flight, or reschedule a flight, yeah. So I literally have nothing I have to do, right? Nothing I have to do. So I could be open. I choose to, like, obviously I have obligations. I'm going to North Carolina, but if something happened, I just don't go, So I am flexible.
Okay, so that was just one person. So you talked about payback score.
Nope, I never mentioned payday store, but I know what you're gonna say. Go ahead, because I know people teach that, and that's the way to treat people to buy their business class. Business credit courses. Sorry.
No. You mentioned, your trade line.
Trade line.
I'm sorry.
Okay, yeah, I was
Your
gonna say,
trade
yeah.
line, that's the word. You mentioned that she had it on. And so I was gonna ask you, was that associated with your payback? In order to get business credit, you would have to have, are those two associated with each other?
No, ma'am. So, and that's where I thought you were going. So I'm, like I said, I try to keep my mouth closed because I don't want to make enemies, but I know I can tell when people are scamming people and it's ridiculous. I've had people that paid $20,000 and $40,000 for coaching and they had to book a $250 call with me and now they're doing way better. So I really don't like scams. So people are teaching people about getting DUNS number, payback score. I can sit here and tell you I have $750,000 in business credit. I have never got a DUNS number. I never had a payback score. I have never ordered from Uline, Shell, Artificial Spending. I have never done none of that. I don't have a storefront. I didn't have a website until last year. That is absolutely all you need is at least a 720 credit score, a business that's generating at least 50,000, and I can teach you how to do that with one rental property if that's the case. But if you have a legitimate business earning income and a 720 credit score with obviously bankruptcies and stuff like that, a clean credit score, you can get up to 250,000 per business. Yeah, that payback score, that's a scam, like I said. And I don't want to say scam because they are teaching people, but they're teaching people the hard way, right? Like I said, I never did that. But I have clients that built up all this business credit, right? And they paid all this money, and you can't buy a house with that credit. Right, so if you had a good payback score and a DUNS number, and what you can, and that's called non-PG, meaning non-personal guarantee. You cannot use those credit cards to go buy a house. I can use my Bank of America, Chase, American business card to buy a house. So so I just didn't want you to say payback because I don't like when people teach that or even charge for that because it is possible to be beneficial, but it's not worth somebody paying for it. And if you want to buy real estate, that would not be the option I would tell you to go.
Well, that's my third one, because I didn't know much about payday. People just been telling me, you do payday. And I'm like, but I got good credit. I got 2 business credit cards.
Oh, yeah.
I'm like, what is the disadvantage of being your personal guarantor of your own? That's what I'm looking for.
So there's no disadvantage. So so right now, like I said, with my credit, the business credit, the rental properties, all that stuff that's on businesses, you would never know I have it unless I default. Now, if I stop paying, then they're going to just put it on your regular credit, like a foreclosure or bankruptcy, whatever it is. But as long as you have good intentions to pay, and if you can't pay, you can always sell it, right? But as long as you don't default, there is no disadvantage. People are trying to, because what happened was people are trying to go around fixing their credit. But like I said, if I can get you 250,000 per business by just having a credit score, fix your credit. If you want to be a landlord, how are you going to ask your tenants to have a good credit score? You don't have a good credit score. It's so easy, guys. Fix our credit. So that's the way not to use your credit and not to be a personal guarantor. And again, it's harder to go that way. And most of the time, the funding is not as lucrative. It's not 0%. It's not, sometimes you have to pay these things, credit cards and stuff back every week. So you can't really grow doing things like that. Yeah, but it's just a way for people to teach and to sell coaching that's not needed. Sorry.
While we still have everyone in the room and everyone on Zoom, I would like for you, if you don't mind, to tell about all the services that you offer. I know you offer the coaching call. I know you offer the consulting call, and you do coaching. And if you would tell about all the services that you offer, and if it's okay, and if you don't want to, that's fine. But if you would tell the fee that you charge, like you mentioned, $250 for the call, so that we would know when.
Way higher than that now.
Okay, all right, go ahead.
Okay, but I'll sure tell you. Okay, great. So, and to me, because just like what I was talking with the young lady back there about is and maybe I should be more firm, but I just believe in meeting you where you are, right? Wherever level you are. So typically, if you're just having one problem, like, hey, how do I get this business funding? The best way to reach me is a one-on-one call.
However, I do charge $1,000 for 30 minutes. And I know that's high, right? But it was just $500. It's been cheaper, but that's what it is. But again, it's guaranteed results, you know, or at least the game plan. If you're in position, if not, you can get there. And again, I can show you 20 text messages that I've gotten probably the last 2 weeks of my client, hey, 50,000, 80,000. So 1,000 is a small piece. So if you're in position, you just need to just get to the source and know a little bit more about exactly what I'm doing. The 30-minute one-on-one call is the best way. That is $1,000. I do workshops, which is like 3 hours. They're via Zoom. They're typically $200. So the next one is the keys to Detroit, where I'm going to teach you exactly what I just showed you, how to buy it for the 80,000, how to get the funding, how to get the managers, how to get Section 8, how to get a city approved and get the most rent. So that's called the keys to Detroit. That would be $200. And I'm going to probably do it in September now because I'm traveling a lot. And I would know the date, but my beautiful daughter, whose business, I told you she owned a business, is creating my digital flyers, and I'm still waiting on that one, but I'm just joking. She did create one for me though, but yeah, that's her business. Like she does digital flyers and stuff like that. And you know, it doesn't have to be big. She's going to college and doing other things, but maybe your kid like landscaping or something. You want to get your kids, you know, making money. So that's the so that's the workshop. Now again, if you do the 2-day, the 1-day 3-hour workshop via Zoom, I typically give you 50% off the one-on-one with me. So that would be another option. And then I have a live event. It'll be, you know, something like this with some more people. But I'm going to bring like my banks and stuff there. They're going to be doing business credit on the spot. That's in August 12th, I want to say, but I need to confirm that. That's going to be, it's a 2-day event. So the 1 day I'm thinking is going to be $597. The 2-day is $1,297. Day 2, we're going to go tour my active projects that I'm working on in the city and tour the city, and I'll point out a couple markets. So that's the live event. I do offer group coaching, which is a master class. It's typically 30 days, and I break down 4 weeks funding. So and nothing's offline if you're in a private, you know, in my coaching section. So I'll teach you exactly what cards, exactly what to say and how to do it. So week 1, we talk about funding. Week 2, we talk about finding and analyzing. So once we got the money, we need to know how to analyze and know if we get a good deal. Week 3, I teach you about project managing and how to rehab it. And week 4, I teach you about property managing, right? So that is $1,297, and I'm going to be doing that in September. It's 30 days long. We got a text group, a Facebook group. We do 2 Zooms every week, and that's how it'll be. And then I do have a one-on-one mentorship. That's 90 days for $10,000, and that's just the first time. It will be $25,000 next time. But for the $10,000, it's literally you have my cell phone number. I'm going to get you into position and make sure you get your first deal in that 90 days. So that's what I offer right now. But like I said, most people, it might be just a one-on-one call or attend one of these 3-hour workshops for $200, get $50 off the 50% off the call, and do it that way. And again, all of this stuff can be found at my Instagram page, Detroit_investor. I do have a website, AshleyHamiltonConsults.com. So it's just my name, Ashley Hamilton Consults, because I consult people.com, and then the services and stuff will be on there as well. Yeah, but to be honest, and I'll just talk. So I never thought what I was doing was special. I just thought, hey, I just had to change my life, right? I thought that everybody was doing stuff like this. It wasn't until I heard Bigger Pockets, you know, wanting me to tell my story is when I started to realize how special, you know, what I was doing, or how many people that are interested and how many people that started like me. So the coaching came later. I never even thought of coaching. It's a whole different avenue. It's very lucrative, like I said, with the affiliates and the travel and stuff. But the reason why I don't have like a ton of courses and stuff is because I'm still active. And that's what, and I'm not saying like when you're dealing with coaches and mentors that they have to be working every day like me, but you want them to still have an ear to the market. So like I said, right now, currently, I really don't even know how many projects I got. I think it's 7. I can name them all and I go to them every day, but I'm managing 7 renovations, 3 full-blown guts, ground-up construction. I have a duplex I turned into a triplex. Again, I walk through this stuff on my story daily, so if you just need some inspiration, make sure you follow me. You can go through my highlights. When I told you guys I bought 22 properties, and I bought 11 properties in 1 year, with 22 and 2. Every one of those properties were on my Instagram page. So, you know, it might be choppy now because you're not watching it, but go through the highlights. You can see the before and after. Some of the properties have 49 offers and I beat it, you know, so it's a lot of good content there, but that is why I'm not, and honestly losing money too, but not saying like that, because I know coaches that's making $1 million a day that don't even have half the accolades as me. but I'm still active, so that's why I can't really do so much on the coaching, and it's new to me, but I still believe in real estate and I love it truly, so I'm still close to it. But yeah, so that's how you got, I'm really an open book. I do answer DMs all the time. And again, the link in my bio has all my products and stuff. All right, yes, sorry.
Yeah, I have a question. So I'm always hearing that, rates going up in real estate, you get people coming from all over trying to invest, wanting to, buy the properties. And my question is, how do you find your properties and how do you deal with the competition? Like, are you seeing it is a lot of competition? Because I have a few real estate friends that are saying how, it's becoming a tougher market to buy in Detroit because of all the competition. Even people like around the globe are buying here. So how do you manage all of that?
Yeah, so number one, there's no competition because no, I'm just joking. But no, I'm just saying, like, in all honesty, I bought 22 properties in the last 2 years, and it was right dab in the middle of COVID. So there are strategies and stuff. Some properties, like I said, I had opportunities where I was buying a property that had 49 other offers. So I just come in with the highest and best offer. And because of my experience, I can do like no inspection contingency and all cash, right? Again, so that's the number one way I'm beating a lot of people is all cash, but that's cash in quotation marks because it's my credit cards, right? So that's how I'm beating a lot of the competition. But to be honest, I know a lot of people are like, what? Out of those 22 deals, I probably found 17 of them right on the MLS. So it's just being quick though, right? So a property that came up, a really good deal, it came on the market. It came on the market probably 5 p.m. I saw it around 10 p.m. I was inside the next morning, right? And ready to make a cash offer, no inspection, even though, you know what I'm saying? So that's how quick you have to be. And then there's no competition. But at the end of the day, I always look at it as what's like, if I don't get the house, I say like, it wasn't meant for me. It was a reason why. I'm very, I believe in a higher power and I'm guided that way. So I do feel like, so that's how I do. I put my highest offer. I don't be stupid. Like some people said, no inspection contingency. No appraisal guarantee. No, I'm not paying too much for a house. But once I find my comp, which is my after repair value, I know the most I can pay. And that's all I do, the most I can pay. But 90% of the time, if you're a cash buyer, you're going to be at the top, right? So MLS, and then also, I don't want to put my friends on blast, but Jay, he's a licensed realtor as well, but he's also a wholesaler. And Tori, I'm sorry, but Tori is killing it. Yes. So I'm on both of their lists. I have bought deals from them. And so you guys want to tap in with them and just get on every wholesaler list in the area, in your area. But I look at the MLS, which you have to be quick. You know what I'm saying? That's how I was able to do it. Yeah. Thank you. Did anybody else have any questions?
Are you able to get any business credit under with a credit score under 7?
So it typically depends, yes, as long as you don't have any derogatories. And again, so when I teach business credit, I can teach you how to get the most funding, like the 80. But if you're just like, hey, Ashley, I just want to get started, or maybe you're not there yet, I might can get you 10,000, just to help you out a little bit and build it. And we say, okay, let's pay it on time. And then after that, then you can get the 80 and it'll boost your credit up. So you could get business credit. And a lot of people tell you your business have to be in established for a year. Like I said, my daughter started her business and was able to get business credit right away. It's just the amount that you get, right? So if you need to buy a house, obviously you want the best credit, the longer the LLC. But if you just want 4,000 to buy some equipment or like to buy some t-shirts that you want to, sell it and make 8,000, you could get a smaller line of credit with lower credit than that, and also without this.
Question kind of on that same line with the business credit card. I was hearing that if you have decent credit above 720, having multiple credit cards, you necessarily don't have to have a business to get that business credit card. But I'm hearing from you that you're probably not going to get the 80,000. You would probably get something less. Is that kind of right, or am I?
So you can get credit cards, but it'll be on your personal credit. If you don't have a business, it's going to be attached to your social. But you don't want that. Again, it's not the to have your personal, but you fall, especially when you're doing financing, because thing called debt to income. So everything you have on your credit is being calculated when you go apply for a mortgage or any kind of loan. And they're looking at, okay, how much money you make. And if we're an entrepreneur, we say we make 10,000, no, we made 100,000, but we wrote everything off. So that's like, oh, you pay 10,000 your tax return. You you have 20 credit cards and, so you don't even qualify for the loan. So by you having business credit, like I said, I may have $300,000 worth of debt on my credit cards, and I can go get a mortgage tomorrow because nobody sees that as long as I'm paying the minimum. And that's why I like business credit better, because when you go to refinance, they don't see none of the debt. Yeah. You're welcome. Sorry, I was over there.
What is a reverse split?
Oh, yeah, so that's a strategy I coined because I'm not against flipping, obviously, but I know that you can still benefit from flipping by doing a reverse flip. I'm not using my calculator for this. So, okay, so let me just break down a flip for you, right? Just an average flip. And again, on average, I know those shows may boost it, but in America, on average, the average profit on a flip is $60,000. Right, and obviously just our market in California maybe a little more, but that's not profit, right? Because capital gains tax, which is the IRS, right? So a lot of us will get $60,000, we get in a jet, or going on a yacht and buying the purses, and now we're living lavish. And then April comes, Uncle Sam, he wants typically 35 to 50% of that. So now that 60,000 has turned into 45 to 30,000, right? Because you're paying capital gains tax, and guess what? The moment you sell that property, you never make another dime for it. Am I right? Once you sell that property, are you ever going to collect it? No, you're not. So that's the example. Same flip. Let's say you're making 60,000, it becomes 45,000 when IRS takes their money, and then you never make money again. So same situation. Now I'm standing to make 60,000 on a reverse flip, but I might have to actually use numbers. So let's say, okay, the house is worth 300,000. My loan is 240. And there's, well, it probably wouldn't work, but okay, yeah, it probably wouldn't work. I should have used 100,000. Let's use 100,000. Sorry. So the 100,000 profit on the flip, again, that's 50,000, or 75,000 once you take away taxes. So if you're in a reverse flip situation, let's say the house is worth 300,000, you only owe 200,000, so you still have that 100,000 profit. When you reverse flip it, which is just refinancing out of it, you just instead put a mortgage on it. So now you're not getting the 60 or 100,000 right away, right? You're not getting that. But you may, most of the time, we're getting 20 to 30,000 right away for the cash out refi, but we're still making money on the car, right? So the reason I call it a reverse flip, because I only do that with hard money lending and business funding. It's not like a traditional bird or something like that. But to be honest, it really is like a bird. I just put a spin on it and trademark it so I can probably, profit on it. But it's a cash out refi strategy, like a bird strategy, but we're using hard money lenders and business credit, if that makes sense. So none of your own cash or credit. Yeah, but it's so again, and how I look at it is, I know it may not sound right, is so I probably should just use one of my real examples on one of my properties, but I don't even have it up. So again, what I'm looking at is if I flip the property, yes, I will make it. Well, and it's still not 100,000. So you owe 200,000 on the property. Is you're going to sell it for 300,000. So the first thing you're going to do is pay commission, right, to your real estate. So that's 6%. So that's 18,000 out of your 100,000, right? So now we're down to 80. Yeah. Right. Okay. So you're at 82,000, and then again, so the Uncle Sam is going to want his 35% of that 82,000, right? So 100,000 in profit really becomes about 60,000 in profit, right? So that same example, you owe 200,000, you're going to sell it for 300,000. So now you're going to go to the bank and say, hey, I would like to do a cash out refi. With hard money, they'll give you 80%, but let's call it 75 just in case the market may change. Okay, so the hard money lender is going to give you 75% of that. So instead of remember, you owe 200, the house is going to sell for 300. Right? Do we follow? I know I was kind of flashy, but you guys all follow me? Okay. So now instead of flipping it, right, we're going to go to the bank and say, I own this house, whatever, I want to do cash out refi. They're going to give you 225,000 back, right? Because that's 75% of 300. 200,000 that you owe. So now you're being left with 25,000, right? So that's why people kind of get confused. They're like, oh, I only got 25,000. If I sell it, I can make 100,000. But you're not, because you're paying commissions and then you're paying taxes, right? So let's actually do the math on that. 300,000, we knew it was 82,000. That was minus the 18. And then you want to times that by 35%. But if you're doing multiple flips, you're going to be at the 50% tax rate. I'm at the 50% tax rate. So, but we'll just use 35%. So that's another 28,700. Okay. Yeah, so your true profit on that 100,000 is about 53,300, right? Now, that's still great, but if you just take 25,000 today, now you're gonna be able to rent that property out or Airbnb it out, and now you're gonna be able to make money for that property for your life, your kids' life, or whoever else, if that makes sense. Now, again, I'm not gonna sit up here and say like I invented that, right? It's just a bird or a cash out refi, but people put names on it and catchy and it sticks. But with my strategy, I use it with only business funding and only on that side of the spectrum, not on my personal side. Yeah, that's the only difference. And again, I know, like I was telling you guys, like, the money is always meant to be spent. I'd rather have that residual income coming in every single month. So a lot of you are going to say, well, I'd rather take the 53,000. And that might be where you're at the first time, but eventually I guarantee you take that 25,000 and own that property, and life is good. Because at the end of the day, you're only losing about, not even losing, but you're only foregoing about, we were at, about 20, not even, so that would be the strategy. Yeah, absolutely. So no, well, not only a tax write-off, and that's another play. If you want to do a flip, I'll give you a quick way to save on taxes. Well, the tax write-off. So yes, any loans are tax-free, right? So when I do a reverse flip and I pay off my 200,000 or I get a $225,000 cash out refi, that's tax-free. I don't owe the capital gains tax. I don't owe any. It's not tax deferred. That's tax-free. I never have to pay taxes on that money. So that is why we do the reverse flip versus flip. But if you do want to flip in that same situation, you can, if your credit's in good position. I still recommend you do a cash out refi, because again, on that time, that same example, you're going to flip it for 300, you're going to make 100,000, but you do a cash out refi. The bank gives you 225. Now your profit is smaller. It's only 75,000, right? So I mean, that can save you taxes if you just want to be a flip, trying to do that refinance first and then sell it. You could do that, but that might save you on taxes. But my goal is, obviously to save taxes the legal way, right? And also to build wealth. So that's why I choose to be a buy and hold and not a flipper.
Are all these strategies you're talking about, are they available for commercial properties as well?
Sure, it is. It is a different language though, but when you say commercial, because technically apartment over 5 units is commercial. So it depends. So like mixed use, that's what I'm doing right now. Yes, and there's other strategies. So on the commercial side, where once you get I don't know if you guys know this. Once you cannot get 10 loans on your personal credit, like through Fannie and FHA. You're capped at that 10 mortgages. You guys know that?
At one time or in history?
At one time,
Okay.
yeah, at one time. At one time. Yeah, I never thought about that, but yeah, at one time, because if you pay one off, no, it's just 10. But most people can't get approved for 10 because your debt to income drastically drops every time you put a mortgage on your credit. But again, as an investor, if you're only buying in your personal name, you're limited to 10 properties or, using other strategies, right? So that is another reason why you want to learn about hard money lending, because I do 30-year long-term mortgages with hard money lending. I mean, they're not reporting to my credit, right? So that is the reason why, because now I'm unlimited, right? I don't like limitations. If you guys haven't noticed that before, right? I don't like to be limited. I want to have control over my time, my freedom, my money, and my choices, right? But so what you could do also, so say for instance, you get 8 rental properties. I know you said you had about 8, and let's say whether they're your personal name or not, or they have mortgages, you can combine them into a portfolio loan on a commercial side. And what that is, instead of having 8 mortgage payments, you can get 1 mortgage payment, and it was considered a commercial loan. It won't even be on your personal name. So it's different ways to do commercial real estate, but for sure, all of those things typically do apply to commercial. Yes, ma'am.
You're saying more than 5 units. So does that mean fourplex is
Yeah, absolutely. Yeah, so that's why a fourplex qualifies for the FHA with 3.5% down. Absolutely. So you can buy a 4-unit apartment for up to 4 apartments personally.
what's the difference between refinance and
Okay, so there's quite a few differences. First of all, a lot of people don't offer lines of credit for the rental properties. They'll do it for your primary, but for your rental. But I have found people to do it. So if you can, I always go for a line of credit. They're always better. They're always cheaper. And what I love about them is once you pay the money back, you use it multiple times, right? So if you have a bank or credit union that offer it, by all means, you want to go with the line of credit because it's replenishable. versus a loan or a cash out refi. First of all, once you get the money, you start paying immediately on it, right? They're going to charge you more fees and things like that. And then again, with HELOC or the line of credit, you only pay when you use it. So that's the difference again, but sometimes you do have to do cash out refis if it's an investment property and your local lenders won't do it. But if they're offering a line of credit, I would take it every time. All right.
Repeat the question.
Absolutely. And I'm actually, see, again, if you didn't realize about me, just the limitation. And I'm not saying I don't trust people, but I have to have a basic knowledge. So I've invested tons of time and money on learning the tax laws. I actually go to a conference every year. So I know a lot of this stuff. 90% of the CPAs I talk to, I know more than them. We're not necessarily how to execute, but I know exactly what strategies I want. And yeah, so there's I think it's Anderson, just on YouTube, right? So they do a ton of free stuff, but all it is really to drag you in and open up another can of worms. But you can learn a lot from YouTube on those topics. I think it's Anderson Advisors, and then I also love Mark Kohler. Again, on YouTube, they do a ton of free stuff, but I do invest in that. Yeah, and to be honest, you definitely want to just get a higher up education, like YouTube and stuff, and talking to people to figure out your direct strategy. Because again, most of the time, the CPAs that you talk to, they're not going to be abreast to the strategies and stuff that we use as real estate investors. Yeah. Anderson Advisors. You're welcome. Yeah, I'm actually certified with the IRS as a preparer because I went to, actually I was volunteering to do, I got trained to do taxes for low income people. We did it for free. So that's how I learned it. And I just got so good at it and started learning more. And I was actually certified with the IRS to prepare taxes. But I have to, obviously I want to do everything, but I've been trying to just slow it all down. So basically, if my clients have tax questions, I would tell them like exactly what I think they should do. But I will always say, hey, this is some legal advice. See if you can find somebody that can put it in place for you.
All the banks offer the portfolio loan.
No. So who I'm doing here locally, Michigan Schools and Government Credit Union. That's who I'm doing the portfolio. But there's hundreds of banks all over. So you can call your bank and they might offer it. Again, that's typically when you have, I think, like 5 or more rental properties that you're trying to blanket. Yeah, but most of, I know like Michigan First Credit Union, they have a commercial line. Key Bank has a commercial unit. So most of the banks do, but it just the products may differ. You're welcome.
I just got a line of questions. So when you speak of credit scores, I think we know that all 3 credit bureaus have different scores.
Yes.
Which credit bureau do you go do you use as far as determining the score?
Right. So I really don't pay attention to that. So I do use the Identity IQ, like a monitoring service. I do pay $29 a month. I would recommend everybody to lock their credit score so they don't have to worry about fraud. And then also so you can keep up to date on your credit. But what you could do is, so every bank uses pools from a certain bureau, right? So Bank of America typically do TransUnion, right? So I have a list of every bank in which they pool for. Or you can just say, hey, I want to get a credit card. Which bureau are you going to protect? And then you go and figure out what that score is. But every bank, all banks may not pull from all bureaus. But that's where it would come into play at. But other than that, it only varies. Obviously one is really, really high. So if that, like, you just have one really good score, like say your Equifax is really good and the other ones are bad, then I would just go to the banks who would, want to pull Equifax.
Ashley,
Yes, sir.
before we wrap it up, you mentioned the term house hack. Could you tell everyone what house hack is?
Yes, absolutely. So if you are not currently a homeowner and you are trying to get your first property, this is what I would recommend you doing. And also, like for my kids and even myself, I would do like out in a couple of years. Basically, house hacking is where you can live in one, you can buy a property, either 1 to 4 doors. So a single family home or a 4-unit apartment. You live in one and rent out the other, or if you have a house, you can live in one room and rent out the other. So the reason why house hacking is so good is because you qualify, especially if you're a first-time home buyer, for FHA, which they will allow you to purchase a property for 3.5% down
I call that 5%. You got my calculator. I call that 5% because you have taxes. So let's say this is your first home and it's $300,000. Can you multiply 5%? It's 15,000. 300,000, yeah, times 5%. I think it's 15.
15,000.
Okay, perfect. Yeah. So for essentially, if you can move into a house, a $300,000 house for $15,000, right? But if you're a first-time home buyer, banks like Bank of America, Michigan First Credit Union, they will give you a grant. Some of them, they change all the time, but most popular grant is $10,000 for first-time home buyers. So essentially, you can buy a $300,000 house today. The FHA mortgage, putting 5% down, coupled with the first-time home buyer grant of $10,000, and you can get that property for $5,000, right? Which you can probably get off of a credit card if you have to, or something like that. You can probably get a gift letter or a loan. Now, again, if that's your situation, $300,000, I use that number because that's what you can purchase a fourplex, around here in the city of Detroit for. So let's say you did that same thing, that $5,000, you can buy a 4-family flat today if you're a first-time home buyer, right? And again, you would rent that out. So a $300,000 mortgage probably would cost you about, well, especially with inflation, probably about, I don't know, let's see, 8, 16, 24, maybe $2,800 or less, maybe, and if that's the case, you got 4 units. And rents, if I tell you guys what the rents are that I'm getting right now, it's crazy. Like 3 bedrooms, I'm starting at $1,400, but they, if I get a Section 8 person with a $1,600 voucher, I'm getting $1,600 a month for a 3-bedroom now. It's crazy. And I say that I know because I'm on the spectrum, right? I still am very attached to my roots, right? I'm still very humble. I don't think I'm better than anybody sitting up here, multimillionaire, 32 properties. I still go work every single day like I ain't got nothing, right? I still don't buy lavish stuff. But so I know it's like a crisis, right? But it's the government's fault and it's not the landlord's fault, right? So yes, right now things are good, but just 6 months ago, we couldn't even collect rent for 2 or 3 years, right? So, the landlords really had it bad. So I understand why they're taking advantage of these higher rents. And I know my properties having granite countertops and everything new. I'm definitely want to get the highest rent, but I do feel bad because 90% of the people do not qualify. So I'm mostly putting Section 8 people in my properties. And again, if you want to be in this business, it's your job to know, right? Versus delegating everything to everybody. Have learn a little bit of something. So when COVID hit, right, everybody was crying, oh, I can't get my rent. I was thinking, what programs are available, right? Let me figure out how this Sarah works. Let me try to get qualified. Let me try to tell all my tenants, hey, if you guys need it, go apply for Sarah, right? Versus crying. So that was able to be successful. And then I also started renting Section 8, which I had never did before. And it's still a gift and a curse. I feel like everything is a gift and a curse. No one strategy is better. Just Section 8 rentals have their own headaches, just like regular cash paying tenants. But so what I was able to do was network with some Section 8 heads of departments in Michigan. They're going to be at my event as well, the actual Section 8. And I'm their preferred landlord, meaning they were sending people out. My houses were passing on the first time. They're like, hey, we like you. Can we send everybody to you? I'm like, what? Yes, of course. Yeah. So I attend Zoom meetings, and I just realized they have 30,000 approved Section 8 people in Michigan that don't have houses. I got about 8 rental properties back in the market. I can't wait. Because they're also giving a $600 one-time boost to landlords for Section 8. And they're also doing $3,000 worth of damages, which they weren't doing before. So just like me, and I feel like as an investor, you should always adjust versus cry and complain or say, I can't do something. We just adjust. So Section 8 realized that people that were applying, because like before, I didn't really care for Section 8, to be honest. So a lot of people weren't getting housing. So they had to start, doing more things, raising their minimums, providing security deposits, and also giving you one-time bonuses. So that was just how I was able to pivot. And man, once these properties get rented out, y'all might see me like splurge on something because because I got 8 properties that's about to come up. So yeah, I'm excited about that. But like I said, it is a double-edged sword. I do feel bad because I know typically a lot of people can't afford housing. But I feel like the government, we need to get on them to do better and figure out more programs. But I feel like it'll be okay though.
Unfortunately, we are going to have to wrap it up because they allowed us to use the room. until 8:30, and we're just about there. But I'd like everyone to thank Ashley for all the information.
To be honest, I didn't even know about this meetup. I didn't even know this man. He just got my number off Instagram, which is on there. But I don't answer the phone. I'm not gonna lie, I don't really answer, but just so happened I answered the number. And he's like, hey, I'm doing a meetup. And I'm like, okay.